Good morning. My name's Carol Harmer from the International Trading Institute, and I can't let today go without showing you the gold market, which has reacted exactly as expected. And by showing you this, I'm hoping that you've looked at the gold videos that I've been doing for the week and that you can see why I was so adamant about these levels that you use when you're going into uncharted territory. If you look and see what the market has done, which I'm going to show you in a minute, you will see how the psychological part of trading comes in with the herd mentality, because there are no levels on the chart. You have to use mathematical calculations by pivot point analysis, Fibonacci extensions, things like that. Now, if I show you exactly what's happened, I've been doing gold, I think, all week, saying that this is going to happen. But now we put it into practice, and I can show you. With the gold market, as you saw yesterday, had a big move up. Okay? Now, we hit that 50% fib. We overshot by a few points. That's the algos. That's the stop hunters. Okay? Those are the ones that will try to muck up your trading. However, if you'd have been buying as it broke the 23.6 fib, you were actually getting out of your longs at the 50% fib. You're not looking to take every single low and high out of a trade. What you're doing is to go in at specific break levels with a specific target in place, and if it breaks it, it's broken, as I said, on algos. So, you need to understand that. It's very, very important. Now, this shows clearly how these levels work in markets that don't have any prior highs or even prior lows. It works just the same. So because we know that there are no chart levels and we're into uncharted territory, we make our own decisions based on these mathematical calculations, which really do help, as the chart you can see. If you go back and look at the gold chart that I did it yesterday. Oh God, when else did I do it? I do gold quite a bit, actually. It's one of my favourite markets. But, you can see it, and that's the thing, is when it plays out and you can see what it's done, it's a really good feeling. Now, if I take it down to the 4 hourly, which, I think gives you a lot more information, you can see that you had this, oh my God, where am I going to go? Am I going to break that 23.6? Am I going to do that? Yes. And where do we head to? There we go. 50%. Now, markets correct back 50%. They do. And that doesn't mean the uptrend is over, but it is showing me the momentum is still there. The RSI is still there. So there's still strength in the gold market. Your stochastics have turned bearish on the 4 hourly chart, and what you do is you then just go in and you look at the daily chart. Has it turned yet? No. Look at the momentum, still high. Okay, so you need to be aware of these levels with these indicators, because they are probably the 3 main ones that I've used over the years. And as I've always said, if it's not broke, don't fix it. And it's not broke. So what we're seeing today is profit taking, obviously. Look to the 4-hourly chart to see whether or not it's holding down, or when it drifts off a bit, where would we expect the market to go today. Remember, Thursdays is normally a very high volume day. One of the reasons being, especially in gold, is that the Middle East don't work on a Friday. So they try and get everything out the way before Friday when they can't. So be aware that there are days where you're going to get more volume in a market because of market conditions and how markets work. And gold and precious metals, mainly gold, work this way on a Thursday. So we're seeing profit taking, understandably so. We should not break now back below the 23.6 fib, coming in at 3250. Now we're trading at 3331 at the moment. Okay, so there's room on the downside for today. If the market holds 32.99, then and goes sideways a little bit, don't forget, you don't have to have a big move down to alleviate the overbought conditions. Markets can go sideways, and that also alleviates the overbought conditions. So just bear that in mind. You know, it's not going to be a massive sell-off, she says, as it goes to 3,000. Anyway, that's what you're looking for. You're looking for entry levels to go back in. Don't worry about it's broken all-time highs. It doesn't matter. Markets break all-time highs. They break all-time lows. You know, it's just the way that markets are. Don't be scared. Don't be afraid. Use your 4-hourly charts. If you really want to see every single move, look at an hourly chart. But the problem with that is it gives you too much noise, too much information. Leave that to the, you know, the professional traders who are doing loads and loads of round trips, but only, you know, they do size for a small amount. So bear that in mind. They're not strategic traders. They are size traders that can do 30,000 gold contracts in the futures market. They want it to come down 3, 4, 5 points. They buy it back, happy days. Now they do that all day long. Now, I've done that, and I can assure you it does not do well for your health. So over the last 25 years, I've changed dramatically my trading strategy. I still keep my initial looking at charts, but I'm not after every move. It's pointless. You can just look at it, put your orders in, go away. I mean, it was different in the days when you used brokers, because, you know, I could be laying on the beach and get a call from my broker. We're near your take profit order. We're, I don't know, 5 pips away, say in Forex, 10 pips away in Forex. For me, not being greedy, fine, close the trade, happy days. We don't have that anymore. It's us. We are alone. We don't have brokers. So if I can teach you what the market is looking for, then obviously, you know, I've done my job correctly. And then you will be able to go on your merry little way with a bit of guidance. Don't get me wrong. We don't intend to drop you at all. We're just not that sort of company. We're not going to drop you. We're going to give you aftercare. We're going to give you not hand holding, because you won't need it after this, you know, program. But we'll be there to answer questions, and, you know, if you get stuck, you always know that you've got a good team behind you who will give you the aftercare that you need. Okay, well, good luck for today, and I'm going to do some more charts for the US Open, and I will see you then. Okay, happy trading.